All right, everyone, welcome back to the channel and thank you for tuning in today. We have a few economic news events today. We have PMI, we have the Fed chair speaking today, I think twice today, once at 11 and the next at 2 o'clock. What I'm looking at now is a chart of the NASDAQ 100 futures. Be very careful when trading today because the market can do some erratic things. So trade what you see, but basically trade at good setups or at high probability zones, okay? So I'm gonna take a look here at the higher time frame first when it comes to the NASDAQ. All right, and of course what we can see here is the market's been selling off. It started selling off pretty heavy yesterday and into the overnight hours. I still have a few of my charts loading up, but we're still making lower lows and lower highs to the downside here. Closed out that, well, I shouldn't say closed out that way. We actually closed with a break of structure to the upside, meaning within this leg here, this high here, and this low down here. A lot of people have a hard time with trading because I talk about this over and over again in many videos. Guys, let me stop and say this. You will not find success in your trading career until you fully understand market structure, okay? It relates to, or I talk about it and use it in a form of an analogy in a sense. If you can read a book, say for instance, okay, I'm not saying it's going to work perfectly the same way or works the same way. It's just that when we read, say for instance, for example, we're reading to comprehend, right? The material, okay? It's, I don't know, it could be anything. It could be, you know, a novel. It could be a story-based book. It could be whatever it is, okay? You know, something you've got to learn for your job, a training manual. But you read it to understand and comprehend, take your notes. That way you can better improve yourself, right? And learn the things that you need to just to understand, okay? But basically, the markets, when you read the charts, is the same thing. You have to understand the flow. Understand what overall the market is trying to accomplish. What is it doing? And you know, sometimes it could be a short-term move, and then it wants to turn and move in a different direction, okay? The key to it is just looking at the structure of the market. And I want to talk about this because this is one of the things that really I struggled with at the beginning of my career. And I've talked about this before. But I talk about things in circles, meaning I bring them back to the surface because I think it's important. And I'll keep doing this and hashing it because I know that people out there are relating to this type of content, meaning the fact is that, you know, maybe they didn't catch the first video because, you know, I've done 600 videos on this channel, okay, 600 plus, all right? And the videos are packed with lots of valuable content. But what I want to share with you in this video here is, you know, basically market structure in a sense, you know, because that is where I struggled and failed at the beginning, okay, of my career. And a lot of individuals out there are probably experiencing similar issues or the same issues to where they're not being able to become profitable or consistent. You know, they may make money one day and lose it the next day. It wasn't until I fully understood or be able to read the market correctly was where the things in my life shifted. You know, when it came to me and these charts and this market, okay, being able to become profitable in this business, okay? Now look, market structure, all it is understanding the flow of the market either in one direction or the other, okay? That means it's moving up, down, or sideways, okay? Now, if you are someone new, beginner trader, please do not trade when the market is moving sideways. It is tough stuff until you know, gain more experience and truly understand it. So what we just want to show you, I want to show you here is just, you know, the market, the ebbs, the flows, making highs and lows, meaning it's making higher highs and higher lows if it's moving to the upside. That's all it is, okay? But you have to understand the market's direction can shift at any given point. Now, the key concept or to understanding the shift is when the market breaks structure, okay? Now, as an example right here, the market was making higher highs and higher lows, right? It made a high right here. And then when it starts to move back to the downside, okay, let's say it started swinging, making lower lows and lower highs back to the downside, right? Always pay attention to the left-hand side of your chart here. Is the market on its move to the downside? Did it start breaking through levels? Levels, of course, are what you see when the market is swinging, okay, in a certain direction. It's moving up, making these swings. When it comes back down and it starts breaking through these swing areas to the left-hand side of your chart, okay, always keep in mind the last or prior high that it just made. Because when the market, or if it does go back up there and break that, then you got a major break of structure, okay? And the key or strategy to how I trade supply and demand. And anyone that trades supply and demand knows that the key to success is doing what? We want to see breaker structures, okay? It's what makes the setups higher probability. That coupled with some other parts of the strategy, like the gaps avoids, if you hear that, back at a zone, okay? And I talk about the strategy in multiple videos to where I break it down. You can see me trade it. I go into detail about it. You got to spend some time on the channel, guys, and watch the videos, all right? Most individuals, or you can come up to the Discord. If you're not a Discord member, I highly recommend you becoming a Discord member by clicking on the link below and joining, okay? And there are individuals, that have found success trading similar to how I trade, okay? Me expressing the strategy I use. They've grasped it, they've incorporated it into their own trading, and they're doing well themselves, whether it's trading with their own funds or trading with prop firm money or whatever to pass those evaluations. I don't trade prop firms, okay, guys? I've been trading for too long, and they weren't around when I started trading, okay? But I don't want to go into that topic. Okay, so, but if you watch the videos, you'll get the gist of the breakdown into the strategy and how I trade it, okay? But it's all it is basically looking for breaker structures. That is the essential piece that makes the zones that we're looking to trade back at just high probability areas or zones to trade from. All right. So, but the thing first and foremost is you got to understand market structure. The movement of the market to the upside, it starts to pull back. Give me 1 second. Come on, my charts I got charts loaded in the background, so the market, my Ninja Trader is kind of run a little slow for me because I got a lot of charts loading up. But anyways, the market starts pulling back right here, and it starts breaking through levels. So when you see the market start moving down to the downside on a pullback or retracement where it's making lower lows and lower highs and breaking swing areas to the left-hand side of your chart, just wait to see if you get breaker structure above. This is a major breaker structure if it breaks this prior high right here at 122.25. All right, it breaks that area there. Once it breaks that area to the upside here, markets, my charts are sticking a little bit because I have things loaded in the background. We look for a key area for it to pull back to, a zone. In this case here, if we're breaking structure to the upside, we want to look for demand, okay? An area of demand for the market to pull back to, all right? So it could pull back to here. It could pull back down here. And as you see what it did do? At the breaking structure right here, this is on the higher time frame. I'm just using this for a reference. I do not take my trades off the higher time frame. I will repeat, I do not take my trades off the higher time frame. I will mark a supply or demand zone off the higher time frame, okay? And then move down to a lower time frame chart to take my trades. I talk about this in videos. It's using multiple chart confluence. Okay, the more confluence you have, one chart showing you this, okay, and then your lower time frame. It's all a setup, guys. I've talked about this. I mean, multiple times. Okay, so look, the market breaks this area or this high right here. Okay, we wait for it. You can mark a zone. Okay, you can mark a zone. It's as simple as that. So here we go. I'm going to show you right quick. All right. Say this is a demand zone right here. The market pulls back to that area. Okay. Right here. Now, it comes down here and it wicks this area. Of course it does. You see that right there. And that's what we call a liquidity grab. Okay. It's grabbing, stopping traders out here, hitting sell stops, running stops, and collecting money. Okay. Liquidity there just to push the market back up. So you mark your zones, okay, off the higher time frame chart, wait for the market to come back to the zone off the higher time frame chart, and then move down to a lower time frame chart, which you're going to take your trades from, okay, the entries from, all right? And I'll show you some examples here, okay? I'm going to show you, okay? But once the market taps into this, say this is a demand zone. If you don't know anything about supply and demand, please do yourself a favor and learn that as well, okay? Because it's a critical part if you want to trade supply and demand. To me, it is the most profitable way to trade and the best way to understand, what's going on in the markets, okay? When you see big push in the market like this right here, what do you see here? I'm going to blow this up. Lots of green candles to the upside right here. What do you see? That's demand, aggressive buying. Did you do that? Did I do that? Did a bunch of retail traders do that? No, the banks and institutions did that. Okay, and we just want to be join the move when they get back to that zone. This right here, again, is a liquidity grab back at a demand zone. Okay, yes, it did break through the demand zone. It grabbed liquidity, but this was a fake out move. Okay, they will do this time and time again. This right here was an untested demand zone on the higher time frame right here. Okay, I'm just going to draw this for all those that don't understand. This right here. Okay, Now look what it does. It comes back to it. It breaks, into the zone, deep into it, and then it wicks out right below the low right here at support. Okay? What is that? The grabbing liquidity. All right? So when I see something like that on the lower time frame chart, if it happens at a zone, not from the higher time frame, but on the lower time frame chart, if I mark the zone on my higher time frame, I'm looking at it from an instance of my lower time frame. What do I see if there's like the setup right here, liquidity grab at the bottom where it wicks right below the support area right here? And then I see rejection, meaning that I see aggressive momentum buying back to the upside. I get into the trade. I talk about the candle break, meaning the close of a candle above the last, say, down bearish candle, okay? There's certain techniques you can use or skill sets. You can look for W formation, there are different rejection types, things to notice when it comes to, or how to identify the rejection at a zone and when to take the trade, okay? So, but anyways, we mark this area of demand, okay? And then we look for the market to pull back to it, okay? Again, aggressive buying right here, all right? And it's breaking structure, okay? Why, again, is it a structural break? First and foremost, it made higher highs and higher lows because it was moving a trend to the upside. It starts to move lower. It starts to do what? Take out swings to the left-hand side of the chart. Look at the left-hand side of the chart to see what's going on. It's imperative. When it starts to take out those areas and then move back higher to break a major area of structure, meaning taking out this prior high right here, then we just mark a aggressive area, an area of demand on the chart where this break of structure, or within this break of structure, this is a key area of demand. Aggressive buying right here. Could the market have came right here and rejected? Yes, it could have. But be mindful because I talk about taking trades at a midpoint or a half point area of a swing right here. Okay? All right? The swing that broke structure to the upside right here. So my primary interest is going to be this area here or back down here at the low. Okay? It did come back here. Again, this is a liquidity graph setup. But you move down to your lower time frame chart. I use range-based charts, so I move down to my 12 range entry chart to look for a demand setup then on my lower time frame. That's the way I do it. I'm waiting for my charts to load up so I can show you an example. So like if I was to mark a zone, how to mark a zone and what I would look for, okay? But if you pay attention here, it came down to this zone right here, demand area, rejects it, and then pushes up, right? It pulls back, then it starts making these higher highs, high, low, and then it breaks up, higher high, and it higher low, and then higher high, and breaking structure. So again, we had the same type thing. High, low, break structure. High, low, break structure, meaning taking out a major area structure. So when it breaks structure to the upside, you're looking for a pullback to a key area of what? Demand, because we're moving higher, breaking structure to the upside. This is following market structure. This is following the structure of the market as it is moving higher. When it breaks those major area structures, wait for a pullback to a key area of demand, okay? All right? Demand is resting right here. There's also demand resting right here. There's also demand, let's see, right here as well. You can see right here, once it broke structure right here at 173, broke higher, it came back to this area right here. Was this an area of demand? Yeah. Pushed up, pulled back, broke higher. All right? It broke higher. And that was an aiding swing that aided in the, well, let me wait for this to stop loading. So this was an aiding swing right here that broke this area structure above. I still have one chart loading. But anyways, so it came back and tapped into that demand zone right there, okay? So what I do is I look down at my lower time frame, my next chart, to which is my entry chart. I'm not taking my trades off this higher time frame chart, just to see if I can get in for a setup to take a scalp. Now, if you go down to the 12 range chart, this was the 29th, say for instance, of November, okay? All right, so we're going to look at, I'm going to show you a couple of things on the lower time frame chart in reference to what I'm talking about. But it's what I want to stress is the idea of, for one, market structure, being able to follow it. And one of the key concepts or core concepts of trading supply and demand is waiting for the breaking structure. It is the essential part to what makes everything come together, the full puzzle, all right? And what makes a setup more high probability. But market structure is just looking at the structural events, the flow of the market as it's happening, So you may ask this question right here. The market broke this high right here above 173, right? All right. So then you say, well, what happened when it starts coming back down, breaking lower, and starts to take out these areas within this? Let's move this over here. This swing right here. Okay. Well, okay. When it starts breaking areas of structure to the downside, okay, then you have to shift. Okay, your mindset has to shift from going long to going short. Okay, so it starts to break structure right to the left hand side of the chart to the downside. Okay, and when it does that, then you have to start looking for short setups on the higher time frame. Meaning, all right, where we were looking for, say for instance, long positions, now we're looking for short positions. That's why I have this area right here marked where I have this supply zone. Okay, so let's take a look at something. I'm going to show you. All right, for an example. Okay. Look, come on. So let's just go over step by step the flow of the market, okay? Higher highs, higher lows, okay? Retraces back, pulls back, breaking structure to the left-hand side of the chart, okay? All right? Then it turns around and starts making higher highs and higher lows, waiting for the major structure break right here at 124. Got that? Then we're looking for the market to pull back to some area to go long, right? It could be right here, latter part of the leg right here, all right? But then we're just following the flow of the market, okay? All right, so it pulls back, rejects that area. Then it starts to break higher, making higher highs and higher lows. Did it break this area of structure here at the top here, this major area of structure? No, this high here at 174. But what it does do is start to take out what I call internal structure, okay? All right, as it's moving higher, making higher highs and higher lows, all right? When it does that, what is it doing then? When it does that, we can start to look for opportunities to go long just as well. But we already have a long bias as it is because the market is breaking structure to the upside here and it's pulling back to some key area of demand. All right. And then it starts to make higher highs and higher lows. Again, back to the upside, even though it hasn't broken through this major area of structure yet, it's still breaking internal smaller areas of structure within this leg as it's trying to push up and possibly break this area here at 173. Hasn't done it yet though, right? Look what it does. Starts to make higher highs and higher lows, takes out small areas of structure within this leg right here. Then it turns right here and does what? All right, now we got a low here. We're in between a high and a low right here. It turns and starts to move lower. Push down, pull back, lower low. It starts to break structure to the left-hand side of the chart here. Is it going to break this low here? If it does, then we really know that it truly has broke a major area of structure right here below 938. All right, and we can definitely look for shorts, right? We know that we're really in a bearish mode then, right? But it hasn't done that, okay? It hasn't done that. What it did was it started to break structure lower, and at that point, is there opportunities to look for shorts? Of course there are, okay? This is the area at which point the market starts to range right here, and there's still opportunities to trade within that range. But you've got to be more skill set and understanding and seasoned or experience to understand trades like this. So the best opportunities fold when you truly wait for the major break of structures to where you can clearly be able to read the market. If you have a hard time, you're struggling with, I don't know which way the market is moving. I don't know if I should be shorting or selling. Then wait for the major structural breaks. Broke major structure right here when it broke higher. Pull back. Okay, all this in between, yeah, okay. This day here, this day here, this day here. I mean, it could go several days and you may miss an opportunity, you know, because the fact is that it took several days for it to actually break this major area of structure. And you know, a lot of times traders will wait for an opportunity for it to break an area of structure like that, and they'll look at other markets, okay? So what they'll do is they'll wait for the structural break, a major structural break. Then once it does that, break structure to the upside, they'll go ahead and mark a zone, all right? And then wait for it to come back to it. And, you know, that's trading or marking off a zone off the higher time frame chart and waiting patiently for it to come back. Now, you could trade from a lower time frame chart specifically, you know, and the best thing to do is to trade in the direction of the higher time frame, okay? So if we're making and breaking structure to the upside, okay, high, higher, low, and we break structure to the upside, as long as the market is breaking structure to the upside and we're still in a bullish mode, you know, showing bullish sentiment, bullish direction, then we can go down to the lower time frame chart and just look for setups to go long, okay? But when it starts to break structure, okay, again, when it starts to break structure to the downside, like it made a high here after breaking that major area structure there, and it starts to make lows, lower highs, lower lows, lower highs, and breaking structure to the left-hand side of the chart here to the downside, then we got to be very mindful. Then we got to start preparing ourselves to look for shorts and no longer longs. Why? Because the overall direction, the tide has changed from looking for trades to the upside, now looking to the downside. So it's all about structural shifts, structural breaks. Is it breaking structure continuously to the upside? Okay, if it is, look for longs. Is it breaking structure to the downside? If it is, it shifts, then look for shorts. All right, at some point, the market, the tide is going to change. And you have to know when to shift from looking for longs to go to short, okay? Now, what I want to show you is using the higher time frame. Just say, for instance, if we mark an area, okay? All right, just marking an area off a higher time frame and looking for a setup, okay? So let's say, using it as an example, the market made a high here and made a low, broke higher, broke structure, and broke above this area here at 16,049 or 16,050, okay? When it breaks this area structure right here, major area structure, okay? Again, we are if we're looking to mark zones off the higher time frame and then patiently wait for it to come back. So it breaks through this area structure right here at 16,050, right? So when you start to see these higher highs and higher lows being created, which aid in the break here of structure, major area structure, you got to look here to see these higher highs and higher lows. Where are there areas of aggressive buying? Well, aggressive buying came out of the swing to the upside right here. Aggressive buying came out of the swing to the upside right here. And we have a area down here at the bottom, okay? So all of these could be areas to which the market pulls back to and pushes higher. And could reject that. So this could be a zone right here, but the reason why this wouldn't be an area of interest to me is because when the market made this area, created this swing to the upside right here, created this demand zone, came out of it, it was already, it pulled back right to the area of where the demand started, okay? So there's no void, there's no gap there. I talk about voids and gaps in videos, so please watch those videos. Just go in on the homepage, and search for gaps or voids or gaps, title that or search for that query, that word, and you'll see some videos there. But anyways, this is a demand zone, an untested demand zone where there's a gap or void there. So let's just mark that area right here, example. All right. So look what happened. It had a high here, higher low, broke major area structure here. Look for it. Once it does that, mark your zone. We mark the zone when it gets back to it, and then we just move down to our lower time frame. So this was on the 21st at 10:37. Okay, let's go back to 21st of November. Just using this as an example, okay, of how to mark, a demand zone off of a higher time frame and how to trade it off the lower time frame. So I'm on my 12 range chart now, going back to the 21st. Well, I need to go back some more. Okay, what day is this? This is still the 27th. Okay, let's go back even further. I'll tell you what. Let me go ahead and do this. Whoops. Nope. All right. What did I do? What happened? Okay. Apply. There we go. Okay. Now it should be on I should find it on my 12 range, my 12 range chart as well. So let me keep scrolling here. Okay, okay, here it is coming up. There we go. All right. So this area right here, that zone there, that's the higher time frame, 60 range, higher time frame demand zone that we marked. It broke structure here to the upside. Took it out with these higher highs and higher lows forming. Once it did that, all you do is mark your higher time frame zone. Okay? When the market comes to it, what is the next part of the strategy and what we do? We're looking for simply the market to come back, test the higher time frame demand zone there, and just look for a demand setup at that point on the lower time frame. Now we're on the 12 range chart, my lower time frame, which I take my entries off of, okay? So what I see here, once market tap into it to the tick, that green zone there is the same zone I just showed you on the 60 range chart, okay? So it pushes higher, pulls back, breaks higher. Now, when it pulled back right here, did it come back to, this is it. Look, I don't know how, I don't know how to stress this anymore or even more. It's just a matter of practicing, 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 practicing. You have to over and over and over. You have to dwell in this stuff, guys. You have to be able to breathe this stuff. You have to be able to read it, or you're not going to be successful. I promise you. All right, so once we tap into that higher time frame demand zone, you need to really just focus on your lower time frame at that point to see if we tap into the higher time frame demand. Once it does, then just look for a demand setup to establish itself on the lower time frame chart. All right, it taps into it. What I like to see again is a demand setup to unfold. Okay, the market breaks higher here. It actually breaks structure right here at 931.5. So when I see that, I say, okay, let me go ahead and mark and see if I have any areas of demand on the lower time frame. Yes, I do, right here. Okay, right here. Boom. You wait for the market to come back to it patiently. When it taps into the 12 range, lower time frame, entry chart, demand zone, then you're simply just waiting for the rejection. The market moves sideways here, okay? Basically what I do is I like to look for a close of a candle, break of a candle in opposite direction to go long. We get it. Once it breaks above, say, 928, go long and take it back up to the top here. So if you got in, say, at 928, 928.5, you were good and take it back to the high. You can take it back up to here at 34 or up to here at 937, back to the high primarily. But one thing to be mindful of too, look to the left-hand side of the chart, okay? Once it breaks or tests this high here, what's going to stop it right here? Nothing. It's going to come up here and want to test, this area up here. This is a, let's see here. Let me see. An area of resistance where it could actually bounce it, right? You see what it did when it got up there? It stopped right here at this area of resistance and bounced before it started to push higher, right? But look, we're talking about demand now on the lower time frame. Demand on the higher time frame, market. Wait for it to come back to it. Now, look for a demand setup on the lower time frame chart. Market, once you see, in this case here, we got to break a structure to the upside because I took out structure right here at 931. Took out this swing area, which was a structural area. Okay, as it moved higher, broke above 931 there. When it did that, it came back. Did it tap into the zone here? No, it didn't. It kept pushing higher. Wait patiently for it to come back to it. When it comes back to it, look for rejection. Boom, go long, take it back to the high. Pick yourself up an easy 6, 7, maybe even possible 8 points right there off a scalp on the NASDAQ. This is how I do it time and time again, okay? Now, let's talk about, just quickly, let me do this. Let's say you missed that opportunity, okay, for that setup. Perfect setup. Confirmation. Why is it confirmation? It's multiple means of chart confluence. Meaning we've got a demand setup unfolded on the higher time frame, 60 range chart, higher time frame, demand zone. Okay? Why? It broke structure right here at 48. Look for the demand area, wait for it to tap into that. Then move down to the lower time frame chart. Get the demand set up on the lower time frame chart, wait for it to come back to that area of demand you mark on the lower time frame chart. When it taps into the lower time frame demand zone, wait for the rejection, take your long shot, okay? Now, let's say once we are in a bullish mode and we are in a movement to the upside, I missed that trade on that perfect multi chart confluence setup, okay? As long as we're bullish, as long as we are moving higher and breaking structure to the upside, okay, and we still have bullish sentiment, then you can just look for on the lower time frame demand setups. That's simply it. So if we miss this opportunity here, where could the next opportunity unfold? Well, it pulled back here, tap into it, we miss this opportunity. Pushes higher, it breaks structure right here, okay, at 940. I'm on the lower time frame chart now. I no longer at this point need to look at the higher time frame as long as we're moving higher on the lower time frame. It's making movement, break structure right here at 940 above, right here, okay? Then all you do is wait for the market to pull back to some key area of demand to look for an opportunity to go long. Now, here's a demand area right here, okay? Let's mark that. This is on the lower time frame chart, right here, demand area, okay? All right, let's move it across. Whoops, move it across. Demand area. Why? I didn't even mark a demand area on the higher time frame at this point here because we were already established that we bounced off of and pulled back to a major area demand on the higher time frame. Then we moved it to 12 range where it tapped into it. We got a structure break here, marked the demands on the lower time frame, and then we tapped into that lower time frame demand. And as long as we're making and breaking structure continuously to the upside on the lower time frame and moving in the direction of the higher time frame, all I'm doing is looking for pullbacks on my lower time frame to do what? To key areas of demand on the lower time frame to go long. Okay, so we missed this trade here. It pushes up, break structure right here at 940. Mark my demand zone. Aggressive buying right here. Wait for it to come back to it. Get the rejection. Close of the candle above. Go long. Okay? It's as simple as that. Okay? It's simple as looking for the market. Break some structures to the upside because we're in a bullish mode. We're moving to the upside. As long as we're doing that on a lower time frame, wait for the pullback. Okay? To a key area of demand. This was demand right here. Okay? When it taps into it, then look for the structural break, okay? I'm sorry, guys. Look for the break of candle, close of candle in the opposite direction as a means of rejection and go long. Now, if it tapped into this area right here, you got to be mindful here to know and pay attention to price action. That's the other thing. So when the market retraces back to this zone right here, pay attention to this area right here, this swing right here, because this price action activity as the market retraces back to this demand zone on the lower time frame, where could it go up to and bounce? Right here. And you see what it did. It actually, if you got to the trade, say right here, say 932 or 933, you know, look what happens. It taps right into this little swing right here, okay? It could bounce right there, all right? But it goes up there, okay? Rejects it slightly, and then breaks above, all right? Because it's going to go up here and fill this other gaps or voids, okay? You have to know what's going on there, okay? But there was a second test to actually get into a trade too as well, okay? So it goes up there, it pulls right back, okay? It pulls back to this demand zone again, all right? And there's a second opportunity to get into a trade right here. You could have went long right there. But all I'm trying to say is that just as long as you're in bullish mode, okay, and the market is moving higher, just look for breaker structures on the lower time frame to take your opportunities to go long. That's all I'm saying, okay, truly. Like right here, let me show you. Let's see, for instance. Beautiful setup right here. I'm going to show you, okay? All right, it rejected that area. Broke structure to the upside. Pull back. Broke structure to the upside right here, where this red line is at 52, okay? Now, broke structure there. We're still on the lower time frame, breaking structure to the upside, all right? Here's a demand zone. Once it breaks structure to the upside on the lower time frame, I'm looking to see if there's any areas of demand. We got one down here. We got one right here. Demand zone. Boom, right here. Look what happens. Continues pushing higher. It didn't come back to it immediately, but that's the part of the game of being patient and waiting for the market to come back to the zone. If you can't be patient and wait for the market to come back, then you're not going to make money. You're going to lose money, okay? Because you're going to be chasing the market, taking trades at just every little pullback, and then the market is going to psych you out, and they're going to run stops and take your money. Wait for the market to come back to those untested demand zones if we're bullish and moving higher. Wait for the market to come back to those untested supply zones if we're moving lower. You take the same concept here, flip it. That's all it is, okay? So the market's moving higher. It comes back and taps into this demand zone here. We get the rejection. Boom, once we get the rejection, blast off to the upside, go long. Simple as that. It came right back to this demand zone. Why? We're still in the lower time frame. I'm not even looking at the higher time frame anymore because we're still bullish on the higher time frame. As long as we're bullish on the higher time frame, I'm just looking for breaks and structures on the lower time frame. Okay? My focus now on this one chart sitting in front of me, the 12 range chart. Okay? Pushes up, pulls back, break structure right above 52. Okay? Where's the demand area? Right here, right here. Okay? It pushes up, pulls back to the demand area right there, taps into it. I get the rejection. This is like a little W formation, what a lot of traders will talk about. Professional traders will talk about, look for the M structure, okay? The M structure is just basically saying that it came down, all right, rejected, market pushed up, came down again, all right, the market rejected. So it's rejecting to push lower, okay? And as long as it's rejecting to push lower, first attempt, failed to push lower. Pushed up, came back. Second attempt, failed to push lower. Get the rejection, go long, okay? That's a sign when it starts doing this sideways mess at a demand zone, for example, or a supply zone that could be an M structure. This case here, we're at a demand zone, W formation right here, rejected and pushed lower, pulled up, rejected and pushed lower, pushed up, rejected and pushed lower. That's a sign that they do not want to go lower, they want to go higher and take your shot going long. Simple as that. Again, what I'm trying to stress here is market structure and incorporating the strategy. But first, you have to understand the market structure piece to it because it is the essential piece. I don't care what market you trade, Forex, futures, options. whatever. If you do not understand the flow, being able to read what's going on your charts, you're not going to succeed. You're just going to be chasing the market, and you're going to be taking pullbacks to every support resistance area, okay? Or areas you think that are supply and demand. It may not be because they're not high probability setups. There's a lot of thinking that goes involved into trading. You know, a lot of logical concepts and things that must come together. You have to think logically, all right? It's just, again, like reading a book, but it's like the visual representation of understanding what's being painted, okay? Now, again, if you want a piece of advice, I want to say this to you. The best way to truly understand and learn how to trade is trade from a naked chart. Do not involve yourself or get involved in trading with a bunch of indicators. You will confuse yourself. I promise you. I've been there and done it. Failed. Okay? If you're looking for success, trade a naked chart. Learn that way. That means nothing on the charts but the candles, and you're understanding and looking at market movement. That's it. Okay? So I didn't go into my whole trading realm today of showing my trades and things of that nature. I wanted to stress and really hammer at the core content of how I trade in this video here, because it's not hard, guys. It's actually simple if you just really practice it and practice it. You know, like everything else you do in your life, whatever it is that you found success in, you just didn't get there overnight. You put time in, time, but you practice, you train, you practice, back and forth, okay? Until you prepared yourself and became a perfectionist at what you can do or doing now with your eyes closed. You know it like the back of your hand. The same thing, you just got to perfect this craft here. Because trading is an art. It is not a science to it. It's a skill set. It's a craft. That's all it is, being able to do this. And that's why I like doing it, because it's like playing a board game. But to me, it's like, it's in real time on these charts, so that's why I love doing it. But outside of this, guys, I'm going to stop rambling. I'm going to go ahead. I need to probably try to get into some of my own personal trading now, so I think I'm going to try to take a couple trades here, even if it's one good trade today. But I'm going to be mindful, because we do have news when we have the Fed's chairs talk or spoke at 11, I think, again, this afternoon at 2 o'clock. But if you're interested in joining our great community on the Discord, find the link down in the description portion of the video. Invite yourself in. It's free of charge. Come over and join us on the trading floor. That's where myself and tons of other fellow traders come together, and we share our trade entries and, you know, the setups that we're looking to take, and talk about trade zones and levels. So come over and join us. Find that link down in the description portion of this video. If you want more in-depth trade breakdowns or detailed ideas to where I discuss in detail my trades that I've taken, I haven't, well, I'll say this. You can join the YouTube tier membership program. It's $6.99 a month, okay? If you choose to, because people always ask me, well, I hear about the trade breakdowns. You know, I like to see and grasp and get a better understanding of what you're looking at when you're preparing yourself to take a trade. What's your thought process? Well, that's the purpose of joining the YouTube tier membership. The Elite Channel Membership tier, okay? Click on the join button on the video here. You'll see a join button somewhere near the title or near the subscribe button, JOIN, or you can click on the join button on the homepage. But it's going to bring up two tiers. Join, if you want to, the Elite Channel Membership tier, because you'll get the breakdown of trades, okay? Also, the video playlist, to where I pretty much pulled a list of videos off the channel, okay, and packed them with links, okay, which you can click on and watch videos that cover, to me, the most pertinent information surrounding, you know, how I trade in general, okay? $6.99 a month, okay? Or you could choose to go pay for someone's trading program, of course, for a few $100s or a few $1,000s, okay? But, I put together all these videos, and you can basically educate yourself by simply watching them. It takes time, okay? You have to. There's no shortcut around this, okay? Don't try to jump to the front of the line, because there's no shortcut into trading. You have to understand and learn the core concepts from the beginning. Also, make sure you make sure you subscribe to the channel by clicking on the sub button. If you are not a sub, go ahead and click on it right now. Subscribe, okay? All right? You've come to the best futures trading channel, okay? I believe, personally, I hear it through other traders, and they've taken loads of interest in this channel, because I break things down in detail. I try to go in as hard as I can and clear up as much and go into as much definitive detail as possible when it comes to my thought process and how I actually trade. So if I was you, I would subscribe to the channel. Also, make sure to do yourself a favor. Click on the bell, turn on all your post notifications so you never miss one of the uploads here on the channel. But last but not least, if you found value in this video today, okay, please like the video. Drop a like for me, okay? Thank everyone tuning in and watching today's video. I'll see everyone in the next video. Also, have a great weekend. Yesterday is Friday. Take some time off to enjoy you, your family. Find something you love to do. Get your mind off of things if you're a little stressed. And if you don't have a hobby, pick something up, you know? Trading for me became a hobby, and now it's the most passionate thing in my life that I love to do. Not to say I love, but I love my family. But trading is a passion because it's a hobby to me. You know, I don't look at it as work. I look at it as something I'm passionate about doing and trying to defeat the game. The game in the end. Got a little hoarse there. Talking too much in the video. Okay. All right, guys, I'm going. See you later.